Good morning. How's it going, everybody? Nice to have you with me on this Monday. Going to be a gorgeous day, full of sunshine, and I'm glad you joined me. I hope you got a chance to watch the latest CFTC data video analysis that I posted on Saturday. If you haven't had a chance to watch that, I would recommend that you go and check it out. We delve into the latest set of data that came out by the CFTC on Friday at 3:30 p.m. Eastern Standard Time. We took a look at the positioning of the institutions and we compared it to previous positioning to help us determine what is in the process of taking place right now. So we went through the data. Today I want to go through those same currency pairs. We're also going to look at gold and silver. And we're going to look at the charts technically, all right? So not taking into consideration the CFTC data, we're just going to be looking at them technically. We're going to look at each time frame and determine whether they are bullish, bearish, neutral, or if we should be watching them with caution. And that will help us to determine what is likely going to take place for the rest of the week and maybe even for the next couple weeks, okay? So thanks for joining me today. If you like the videos that we do, please like and subscribe if you haven't subscribed, and you know the whole rest of it. All right, anyways, let's get down to business. Let's shrink me down here so you can take a look at the charts. And there you go. What do we have? We have gold here. So what have I been saying with gold? Well, I've been saying that it's got a bullish chart on the higher time frames, but we got to be careful because, you know, things are overextended, right? And, when we look at overextension, how do we determine overextension? What's the definition of extension? A lot of people have different meanings for what overextension is. And I've seen throughout my years of trading what people determine, how people determine overextension. And frankly, it doesn't make any sense. The thing is, you need to know what time frame chart you should be looking at in order to determine if something's overextended, because something may look overextended on the daily time frame, but really what's taking place on a weekly time frame looks completely natural. So, I mean, you have to understand context is what I'm basically saying. So, let me show you an example of context. When you understand how to actually do the right type of analysis, in my opinion, there's a right and there's a wrong. You have to be able to cut out the subjectivity. And that's the problem with a lot of technical analysis is a lot of it is subjective. You're looking at it and it's based on what you see. It's based on how you determine things. It's based on your definition of overextension. So I'm going to show you something that is very objective. And this is why it gives us a better insight, a more detailed, more in line with reality, in line with truth, insight of what's happening on the charts. Okay, for instance, when I take a look at the gold chart, I look at the monthly chart. We've said that it's bullish, okay? And what makes it bullish? There's a couple things that make it bullish. First of all, there's buying that's been taking place. The chart is moving upwards. And we have a upward trend line, okay? Those are the things that make it bullish. Now, when you look at where price is right now, and you see the distance from the highs to where the trend line is, you can see it's quite up there. When you see the last time price moved away from the trend line, you can see the difference between what it did and what it's doing. There's a big difference, okay? So when we look and put things into context by looking at the gold monthly chart, you can see that price has moved quite a distance away from the trend line that is defining this as an upward trend, okay? So that's important to recognize that. So that means over the longer time, which the monthly chart represents, we are seeing that we are reaching near the end of how much price can continue going higher. All right. So now we go down to the weekly time frame. And we also have an uptrend because how we define an uptrend, all the elements are there. There's institutional buying taking place, and we have an upward trend line. So it matches our definition of what an uptrend is. And our definition is based on what institutional traders create on the charts when they're pushing price to the upside. Okay. First, you have to be able to determine who moves the markets. It's not retail traders. Okay. And so once you realize that it's big institutional trading that's dictating the movements of price, then you have to look at the structures that are being created by them. And so when you recognize a structure as being bullish because of past historical analysis leads you to believe that, then when you see that type of structure again, it is most likely the case. So you see where price is now and the distance between the highs and the trend line. And you look at previous highs and the distance to the trend line. And you can see in this scenario, this is a lot more uniform. The move up is a lot more in line with the trend. And this is one of the big reasons why we have been saying that if price was to decline down from its highs down to this area of institutional buying, that this would be an area of interest for us to get in long gold, because all the key elements that we're looking for are right there on this time frame, right? So now we go over to the daily time frame, because what we would need to take place in order for price to drop down to that weekly area of demand, we would need a breakdown of structure to take place on the lower time frames. So what we see here is a demand zone was created and a demand zone was used to propel price higher. Question, is there a ascending trend line here to support price? Now, some would probably draw a trend line, something like this, okay? But we know that this is not a high quality ascending trend line. And there's reasons for that, and we won't go into that because this is what we teach at the school. But there's reasons why we would not draw this trend line. So we can tell that this trend line is not representing an upward trend. So demand has been used. As you can see, demand was created. Price moved up from that. And so now we look down one time frame. This is a bullish chart, meaning it is going up. But the fact that there's no ascending trend makes us cautious with this time frame. Okay? This is what we want. We want to see a breakdown of structure if we're going to be getting what we want on the weekly time frame. All right, so now we look at the 4-hour time frame, and we determine that it is bullish. Why? Well, it's moving upwards. It's got some of the key elements that we look for. Demand is coming into the market, and we have an upward trend line to support price. We look at the price structure. We see how far price previously moved up from that trend line, and we look at where price is now. And if you can tell, we are basically at that same distance away from the trend line, okay? And we suspect through the analysis that we do, the Sherlock analysis process that we teach at the school, one thing I always say is you always need to know what time frame is the time frame that is in play. When you know what time frame is in play, then you know what you should be watching for. We suspect that the 4-hour time frame is in play right now. we suspect that this is the important time frame that we should be watching. So if this is the important time frame that we should be watching, this is a key moment in time where price is consolidating here at these highs. Key moment, because if we get a break of this area to the upside, what will happen is this structure on the 4-hour time frame will be way past its mark. Okay, it'll be overreaching to the upside and dismantling this structure that is looking so nice right now. But if we do get a drop here, we're going to be dropping right down to this institutional buying area, and there could be short-term buying that comes that comes in from there. Okay, so I'll be watching that very closely, because if this demand area breaks, then this structure will be breaking, which will open up for this structure on the daily chart to be breaking, which will open up for a move down on the weekly time frame to align with that area of demand that we were talking about. So what happens on one time frame leads to what happens on another time frame, leads to what happens on another time frame. If you don't know which time frame to be tracking, if you don't know which time frame to be following, then you're lost. Then you're left to drawing different types of indicators on your charts, and one chart would tell you one thing, another chart would tell you another thing, and then it's just very complicated and very confusing. Like this, once you follow our methodology, it tells you exactly what time frame you should be focusing on, and then you watch the signals on that time frame. All right. So there's some advanced analysis for you on gold. Hope you appreciate that. Let's go over to silver. So, you know, we know the overall theme here on gold is that we really need a pullback, okay? A pullback on the weekly time frame is what's required for this to be, for there to be a more sustainable move to the upside, all right? When we look at silver, we see supply has been recently taken out on the daily time frame. Demand was created, and price is moving up. When we look at this chart, there's no strong indication of what price is going to do, in my opinion. I mean, I have already previously mentioned that when we look at the monthly time frame, it is setting up in a bullish fashion. Why is that? Well, price is moving upwards. We have all those key elements that we look for. Demand came into play, and we have an ascending trend line that is dictating the trend, right? When we look at how far price moved away from the trend line, it's a similar distance. It's proportional, all right? So any type of drop to this area of demand will likely see buying taking place from there. It already took place in the past here, but if it was to retrace again, we suspect that we would see some buying. And this is on the monthly time frame. So remember what we were looking at in terms of gold. We were looking at the weekly chart, and weekly chart represents medium term, okay, medium time frame. So if price was to drop over the medium term and come into demand, if silver was to drop and reach down these areas, we are expecting to see buying taking place off of the demand zone on the weekly time frame on gold, and this would logically very much likely hold, and we would see a bigger push to the upside, a more sustainable move to the upside form from there. And that's only if price was to get down there. All right, very good chance that if price got down there, that's what would take place. All right, we look at the dollar, and the dollar fell short of hitting supply areas that we were watching here. Okay, fell short of hitting that supply up there, but the latest area of supply is right here. All right, so selling has been what the banks have been focusing on the medium term charts, on the short term charts, and right now we got some ranging taking place. Not very clear we had some supply being contacted on the daily time frame, and it's been downwards ever since then. What's going to happen next? We're in limbo mode, okay? What do I mean by that? Well, if you look at what just took place, this is happening across a lot of the other pairs, and this is really important to take note of, because on the higher time frame, we have price breaking through an area of demand, and now it's pausing. So technically, this chart is neutral. Anything can happen. You can have a move to the upside take place, or a move to the downside take place. We had the move down, we're basing. So now does the momentum continue to the downside, or does it retrace upwards? It's not until areas of supply or demand are contacted that we start to get an edge in knowing which direction price is going to go. So for the time being, we just sit on the sidelines. Aussie, it's building up momentum to the upside. This is a good thing. We told you that the odds were that there was going to be a move to the upside. And as you can see here, there is already an area of supply on the shorter time frame, 4 hour. Okay, supply removed. Buying is becoming the more important driving factor, and this is what we want to see if price is indeed going to rally up. Okay, previously we got this area of supply taken out on the daily time frame. All right, there was a nice retracement after that, but now you're starting to see the momentum building up again. This is good. And this could all be leading to a push up to contact this area of supply. This is the area of supply that we have our eyes set on. Okay, it's a big institutional supply zone that the banks created as price was dropping. So we think that if they're going to continue pushing price downwards, that would be the ideal spot to enter into a short trade. All right. And let's go over to the euro. So euro pushing upwards. Here's that same situation that I was telling you about. Take a look at the weekly time frame. We just got a supply area taken out. So price can technically go upwards or downwards at this point. Okay, after basing. All right, it can go either direction. When we look at the daily time frame, there is a slight bullish bias. Why is that? Not that there's an upward trend with demand, because there isn't. All that's happened is a big move to the upside, but we have demand that's in play right now. As long as that demand holds, our suspected move is going to be to the upside. Okay, but we have to watch and see. If that demand breaks, then we are expecting a move to the downside. Right now, we're getting a lot of sideways action, which is normal because we just got a big momentum move to the upside on the weekly time frame. We removed a supply area, and now we're basing. So that basing is represented as ranging on the lower time frames. So we're going to be watching that as things unfold. When we go to the pound, we can see that demand is, or supply is still holding here on the weekly time frame. The zone was never removed. So obviously with supply holding like this, we would have a bearish bias on the chart. Okay, supply is holding, while on the euro it has been removed. Okay, but we could also look at it this way, that since supply has been removed on the euro and demand has been removed on the dollar, there is a slight bearish bias, or bullish bias, as I say. Slight bullish bias. Maybe that supply being removed on the euro is indicating what's about to happen on the pound. I've seen that a lot too. Very difficult to tell at this point, okay? Bearish bias because supply is in play. We have to respect the zones that are in play. Unless this zone gets taken out, it's got to be bearish, all right? So I'm watching for that. Not that I'm getting into a short position, though. Let's be very clear. I'm just watching to see how things are going to move until there is a higher probability trade signal, okay? Now we go on to US CAD. There's a slight bearish bias here on the monthly time frame. Not that there's a downward trend, With supply in play? No. But there's supply in play. So we have a slight bearish bias. Not a strong bearish bias, slight. Weekly time frame, we also have supply. Okay? So slight bearish bias. Daily time frame, we also have supply here. Contacted twice. So we have a bearish bias. And the interesting thing is that when we look at the Aussie, as we were just doing, there is that bullish bias of price rallying up into that major area of supply. So that coincides very nicely with what we're seeing on the US CAD here. So bearish bias on US CAD. US Swiss looks bearish. We recently rallied up to contact this area of supply. So this tells us that on the daily time frame, which is to indicate a short-term move with supply in play, we are expecting a bearish move over the short term. All right, US dollar, Japanese yen, same situation pretty much. On the daily time frame, we contacted supply. Daily time frame represents short-term momentum. Supply has been contacted, so we are expecting short-term momentum to the downside. Okay. That's what we see. And I know you guys love Bitcoin, so we'll take a look at Bitcoin. So we called the top of Bitcoin at 110. Don't know if you guys were there to see that, but it was a pretty remarkable call if you do ask me. If I may say so, 110,000. We just came within pips of that. I mean, really darn close. We came, what, to 109,590. We said most likely the reversal point was going to be 109,672. I mean, how damn close was that? Price dropped through. We had our supply here when price was rallying up there. I told you we were going to see a drop in price, and that is what has taken place. And now price has contacted demand, so we're seeing short-term move to the upside. But this chart is very heavy, and we talk about that at the school about what constitutes heavy. What's the definition of heavy? Why would we call it heavy? Well, there's a lot of selling pressure taking place here. Okay, so even though we're getting these short-term moves up off of demand, the overall flow of price has been to the downside. So we suspect over time this demand area will break through and price will drop even further. It'll take some time, but I do suspect that that's what's going to be taking place. All right, ladies and gents, I think that's pretty good. I think I gave you a lot to think about. I hope you enjoyed it. And again, I was mentioning this CFTC class that we've got going on. We're going to be doing it this morning at 11 a.m. with our students. And basically, we're going to be looking at the latest set of data. And we're going to be sharing some insight of how we logically process the reports, how we examine the data, take it apart, and how do we determine what is going to take place next with price just by combining the CFTC analysis and the supply and demand analysis on the charts. So if you want to learn how we do this analysis, please come and join us. We'd love to have you. All right, folks, that is it. WhiteOakFX.com. Enjoy your day. We'll talk to you later. Take care.